All right, welcome to this urgent financial explainer. Right now, we are watching the very first company cross the finish line in this massive AI race to go public. SpaceX is officially trading under the ticker symbol SPCX. And man, it is completely dominating the news cycle right now. The hype is literally deafening. But as your trusted guide through all this financial market noise, I really need you to look past those flashy headlines for a minute. Today, we're breaking down the exact nuts and bolts mechanics of this public offering. And we're going to look at why it might actually be a carefully orchestrated trap for everyday retail investors. Let's dive in. Okay, first things first, let's look at this staggering number together. $75 billion. At an IPO price of $135 a share, SpaceX is raising at least $75 billion. That absolutely shatters records. We are talking about the largest IPO capital raise in history, totally blowing past their original $1.75 trillion market cap objective. I mean, this single event is officially minting Elon Musk as the world's very first trillionaire. But listen, the sheer unimaginable scale of this money grab, that is exactly why we need to pop the hood and see what's really going on here. Section 1. The biggest IPO in history. To understand how they're commanding such a record-breaking valuation, we first have to look at the narrative they're selling versus the actual reality of their business. Now, to be completely fair and objective here, SpaceX has some incredibly impressive, genuine wins under its belt. They have totally revolutionized the space launch industry by pioneering reusable rocket boosters. I mean, since 2023, they have controlled a massive 80% of global mass to orbit. 80%. Add in their fast-growing, actual profit-making Starlink internet business, and yeah, you've got a seriously dominant space company. But, and here is the massive but, a successful rocket company all by itself does not justify a multi-trillion-dollar valuation. So, to justify that gigantic price tag, they really have to sell you a dream. And what's wild to me is that this quote isn't from some sci-fi novel. To extend the light of consciousness to the stars. That is pulled straight from their S-1 prospectus. That's the legally required, highly regulated document submitted to the SEC so investors can make informed financial decisions. In a really unconventional move, you actually have to scroll through like 11 pages of literal rocket ship pictures before you even hit the table of contents, only to be met with these grandiose philosophical statements. Honestly, the prospectus reads more like a wish list from the year 2300. The company is actively marketing itself to you as a bet on completely unproven, non-existent technologies. We're talking point-to-point Earth travel via spaceship, a full-blown Mars colonization enterprise, AI asteroid mining, and human augmentation systems. By their own admission, right there in the filings, the tech for a lot of these business lines simply doesn't exist yet. They're basically asking you to pay a massive, massive premium today for a science fiction future tomorrow. Section 2, the AI valuation bubble. Because honestly, those sci-fi space dreams, that's just the appetizer. The real engine driving this massive valuation is the recent acquisition and integration of xAI. We are shifting from a space exploration narrative right into the absolute heart of the AI bubble. When you look at the math, the numbers here are just staggering compared to the rest of the market. SpaceX is hitting the public market with a price-to-sales ratio of over 90 times. 90x. Just let that sink in for a second. Compare that to wildly profitable tech and AI giants out there like Google and Meta, which traded around a 10 times ratio. It's so disconnected that Morningstar analysts have actually argued that based on current performance, SpaceX is worth less than half of its IPO price. You are paying an entirely unprecedented premium here. Now, usually an extreme valuation, like 90 times sales, is justified by blistering exponential growth. You're paying for hypergrowth, right? But the financial reality tells a totally different story. SpaceX as a whole is currently losing money at the operational level. And what about that highly touted AI segment? Well, it's growing at just 12.5% year over year. Think about that. That's actually slower than the company's overall revenue growth of 15.4%, which is itself well below the growth rates of their major competitors. The math simply does not match the hype. And yet, if you look at their projected total addressable market, or TAM, which they claim is about the size of the entire US economy, by the way, a staggering 93% of their future revenue potential is supposedly coming entirely from AI enterprise applications. 93%. But let's look at their actual AI product, Grok. Right now, Grok is primarily viewed as a social media extension, mostly known for questionable behavior on the platform formerly known as Twitter. Their main enterprise use case marketing essentially boils down to what is a glorified Google Translate. It's incredibly difficult to see how they're going to dominate the enterprise space when they are simultaneously renting out their own compute power to direct rivals like Anthropic and Google. Section 3, the retail setup. So if the institutional analysts know the math doesn't really add up, who exactly is this IPO for? Let's look at the structural mechanics of this deal and why you, the regular investor, need to be on high alert. In a typical run-of-the-mill IPO, companies might reserve, say, 5 to 10% of their shares for individual retail investors like us. Not here. SpaceX has explicitly opted to reserve a massive 30% of its shares for the everyday investor. They even launched a dedicated website, SpaceXIPO.com, giving retail investors access to roadshow presentations that are usually kept strictly for institutional heavyweights. They are aggressively rolling out the red carpet for retail capital. And the brokerages? Oh, they are playing right along. Fidelity, for example, drastically lowered its capital requirement specifically for this IPO, dropping it from $500,000 all the way down to just $2,000. They're completely lowering the barrier to entry here. Why? To ensure that smaller investors who might be getting swept up in the FOMO of this AI gold rush can easily pour their savings right into the stock. But here is the catch. While they want your money, they definitely do not want your input. Thanks to a special class of shares that carry 10 times the normal voting power, Elon Musk will retain 85% of the voting rights over SpaceX. 85%. You might own a piece of the company, but you are going to have zero say in how it actually operates. You are taking on the very real financial risk of a highly unprofitable company while all the control remains completely, 100% concentrated at the very top. Section 4. Are You Exit Liquidity? This leads us to the absolute most critical and, frankly, the most concerning risk hiding within the structure of this record-breaking market event. You really have to ask yourself a tough question right now. Are everyday retail investors simply being brought in to serve as exit liquidity? Think about this. The public float for this IPO, the shares actually available to trade, represents less than 5% of the entire company. That means the vast majority of SpaceX is still held by early private investors and company insiders, people who bought in at valuations infinitely lower than this new $135 IPO price. Let's look at how this plays out on a timeline, because it is super important. Right now, at month 0, retail investors are aggressively buying in at this absolute peak valuation. But in just 2 short months, staggered lockup periods will begin to expire. Over $1 billion worth of insider shares are set to unlock in the near term. When those insiders decide they want to cash out their massive profits, they need a sea of buyers to absorb all those shares without completely crashing the stock price. And that sea of buyers? Yeah. It's the retail investors who just got lured in by those lowered brokerage minimums we talked about. And to make sure the price stays perfectly propped up while those insiders exit, there's another structural trick at play here. Major index providers like NASDAQ and FTSE Russell have actually eased their normal criteria to fast-track SpaceX's inclusion. This means SpaceX could join major indices like the NASDAQ 100 within its first 15 days of trading. And why does that matter to you? Because it forces massive automated passive funds, like the ones sitting in your 401k or your pension, to just blindly buy the stock. It forces them to buy completely regardless of its crazy 90 times price to sales valuation or its unprofitable fundamentals. Section 5, Actionable Takeaways for Investors. Okay, we've looked at the marketing, we've done the math, and we've exposed the mechanics. Now let's bring it all together so you can actually protect your portfolio and make a really informed decision. So, the crucial point here is that you absolutely must weigh these massive red flags against the prevailing hype. Let's recap. First, at a 90 times sales valuation, this stock is priced for absolute flawless perfection over the next entire decade. Yet as we saw, they're currently losing money. Second, with this massive retail concentration, a visionary CEO known for controversy, and a public float of less than 5%, extreme meme stock level price volatility is practically a guarantee. And finally, you have those imminent insider lockup expirations, which are threatening to dilute the market with $1 billion of selling pressure almost immediately. Look, the AI revolution is undeniably real, and SpaceX is an absolute engineering marvel, no doubt about it. But a great technology does not automatically equal a great investment, especially not when the deck is structurally stacked against you from day one. So I'm going to leave you with this thought. When it comes to the biggest IPO in history, will you blindly buy into the sci-fi hype? Or will you look closely at the math before risking your hard-earned capital? Keep learning, keep questioning everything, and I'll see you in the next explainer.